Well, if you're like most of us, you woke up today to the markets in absolute destruction. If you're like most of us, you pretty much check, what the futures market does on Sunday when it reopens back up. And, at one point, just an absolute free fall. Markets were down at one point in time over 1,000 points. I think this is, I believe, if I'm not mistaken, please someone correct me if I'm wrong, but I believe this was the single most drastic drop in one day's session, going all the way back to like the 87 crash, 87 88 crash. With that being said, where do we stand from here? So when I woke up this morning, I pretty much told myself, I'm not really going to be trading a lot of funded accounts. I'm not really going to be putting on too many position sizes with my personal options account, just due to the fact that we haven't traded these levels in quite some time. So a lot of the ranges were wacky. They were very, very large. At one point in time, I was looking at the NASDAQ 100 trade, 80 to 150 point range in a single 5-minute candle. It's very, very hard to risk manage when the range is that exceptional. So I'm just trying to gather my thoughts here, because I've been trading for 10 years, and I personally, even with the COVID and pandemic trading, haven't really seen something this drastic and this quickly. Why the market is doing this. There's news headlines coming out of Japan with them raising rates and the dollar losing value next to the yen, and them also as well having, two of the biggest down days that they've had actually caused their markets to halt and shut down for the day. We've got a lot of news headlines coming in from the situation we have in Israel. So, Kamala Harris, I've seen those headlines too. This is the Kamala effect, or this, that, and the other. Whatever the reason is fundamentally that why we are trading this low, you really have to take a step back. So I understand that there's a lot of traders who, haven't been around the markets that much, and you come into each and every single day session and you believe that, hey, well, the market's open, why can't I trade? I don't understand, that it's not a good time to trade, or when is a good time to trade and when's not a good time to trade. Look at, if you're looking at the charts and you're gapping down, or gapping up for that matter, 250 points, 300 points, 400 points, it's not going to be a very good day to trade. There's going to be a lot of fake outs. There's going to be a lot of big ranges. And the problem that comes with big ranges is that it's hard to risk manage in terms of setting stop losses. Because let's say, for example, you're in on a position long, or you're in on a position short. The severity of the candlestick, one single 5-minute candlestick or 2-minute candlestick, or even 1-minute candlestick, the range is 2, 3, 4, 5 times is what it normally is. So you can get into a trade that is technically correct, but before you have a chance to sell for profit, because the range is so big, you could be down hundreds of dollars, if not thousands of dollars, depending on your account size and how many contracts you're trading. So realistically, it makes it more difficult, because yes, maybe you might be able to identify good moves. Do you have the cushion or the drawdown to support being able to withstand some of the wiggle, right? So that's what makes it hard. Now, my whole game plan coming into today was, if the market gapped down, which I wasn't expecting 1,000-point gap down, but I was thinking if we gap down through Friday's lows, down 200, down 150, down 300, I would be looking for the short-term bounce. Now, when I woke up this morning and I seen that the market was down 800, 900 points, and at one point in time over 1,000, the thought process is still the same, but when the market is showing such big ranges, now I have to be a little bit more cautious. So I decided to trade some evaluations today. We lost one and we passed one. So that's just the name of the game. Traded the funded account today, made around $450. And that was almost a heart attack, because, you can watch your position go from green 100 to red 400 at the blink of an eye. So I decided to personally stop trading on a day. You know, this video is a little bit more mellow. It's a little bit more calm. It's not really talking about strategy, but it's just kind of talking about where the market's at, right? So right now we have had a little bit of a dead cat bounce today. Okay, you would almost expect that with a down move of upwards of 1,000 points. Why did we bounce where we bounced? Well, we came down to the daily 200-day moving average, and this daily 200-day moving average hasn't been tested in quite some time. So this is the first test of the 200-day moving average, okay, on a daily time frame. Now you are getting a very, very aggressive hammer candle that is starting to form. The last time that the 200-day moving average was tested, if you just go all the way back in time, was going all the way back to last year, almost around October, November's time. Okay, so it's been about 10 months since price has been down in this area. Now the 200-day moving average is your granddaddy moving average of them all. This is why you can see some buyers starting to step in, because those longer term buyers, you know, who are looking at Nvidia trade in the 90s or 80s, and, you know, looking at AMD be down, looking at Apple be down, are thinking that this might be a good opportunity to buy the dip. Now, if you do start averaging into positions, you can definitely make some money on a continuation dead cat bounce. Even if the market is not going to continue to go higher anymore, you should still be able to have a little bit of wiggle room. The line in the sand, okay, and this will remain on my chart probably forever, okay, this line here. So today's low of around 17,333 would be a confirmation of losing, okay, losing the 200-day moving average. That would be very, very significant. With about a 40-50% retracement on the actual move today, I can see a continuation, maybe 2, 3, 4 days into upper supply. And what I would be looking for here is anything over 18,442. I would look for a push into 18,800s. Okay, that would be the range that I would look to play on a continuation dead cat bounce. So if tomorrow we can somehow take out today's high and get over 150 simple day moving average, I would be more biased towards going with that dead cat bounce. Now, if we gap over that level tomorrow, I'm going to be looking for the short position after the 30-minute opening range. Okay, so I'll take that 30 minutes of trade, I'll mark out that range, and I'll look for the short position off the rejection. I will also look for short positions if we gap over this 150-day simple moving average. If we can't sustain holding that level after the first hour of trade, which is the initial bounce, okay? Because now that the bulls have essentially lost control of this chart, they're going to have an opportunity to take back some short-term control, but they're going to need a lot of work to do. So let me read off a couple of supply zones that we need to absolutely get over before the bulls can start to trap some of those shorts. Okay, 18,805, 19,050s, 19,400s, 19,700s, and 19,900s. Those would be your levels of supply to the upside. So any type of bounce, any type of dead cat bounce that doesn't clear out at least 20,000 over the next few days, over the next week, over the next month, the pressure is still going to remain down. Now, because that this decline has started almost a month ago, going all the way back to July the 11th, this could be a good opportunity to start looking for those longs, for that short-term buying opportunity to the long side. So for example, if anyone, you know, threw on a micro or 2 micros at the beginning of the day, you would have made over 200, 300, 400 points. It was one point in time that the market was reversing 100 points at a time on any given 5-minute candle. So the moral of the story is, a lot of these prices haven't been tested in a long time. The market hasn't had VIX spike up this high since the COVID crash, and it's a lot of uncharted waters. So you need to be a lot more cautious, a lot more careful. If you do manage to take a few scalps and you do manage to make some money, don't think about it in terms of, I can make more because the market's moving a lot. You need to think protection. I need to live to trade another day. Now, if you find yourself losing some trades, trying to reverse, trying to bounce, trying to go short, and the market's not playing in your favor, this is going to be a very easy time for a lot of traders to lose and go on tilt. Okay, so we have to make sure that we're going to control these emotions the best that we can. Remember, the market's not going anywhere in terms of, you know, it's shutting down or anything, right? Even if the market today, you know, was to go down another 100 points at one point in time and be over 1,000 points down, and they halted the market, it's not meaning that it's the closure, the end all be all. The market's going to reopen. So we always have to think about the future and not about what's going on right now. Even though I know a lot of traders are so excited to get back to Monday because they feel like they've missed out on 2 days where they couldn't trade and there's nothing really going on. And now you're so anxious to get back into the markets and start making some money that you can let what's really going on in front of your face kind of get confusing. Because what's going on right now in front of your face is there's a lot of things in the world that are going on right now that fundamentally that are affecting the price of the NASDAQ as well as the other indices. Okay, the ranges are extremely large, so if you're trading on the prop firm side, you're going to have trouble managing this risk without having to open up a huge stop loss of 50 points, 100 points in an environment like this, which is going to make it extremely difficult. Okay, there's going to be a lot of people who are going to make some cash and they're going to see dollar signs and want to make more, and they're going to get emotional, give it back, and go on tilt. There's going to be a lot of people who don't believe that the market's going to bounce from here, and they're going to continue to short and get trapped out of those positions. There's also going to be a lot of people who don't believe that the market is going down anymore, that this is the end all be all, and they're going to get long, and you're going to run into a high volatility candle of 30, 40, 50, 60 points that stops you out. And the question needs to remain, what are you going to do after that? Because it's what you do after that happens, after any one of those scenarios happens, is what's going to determine how well and how consistent and how, you know, how much you're going to be able to grow yourself as a trader on this journey. So again, use your macro levels. As far as where we stand right now on the daily time frame, this could be a short-term buying opportunity for longs to kind of step in here and take us on a 2 or 3 day dead cat bounce. Okay, it doesn't mean that we're going to go to all-time highs and put in a new all-time high. This is a short-term trade idea. Okay, also start looking to your intraday higher time frames, such as the 1 hour and the 4 hour time frame, to kind of see where we stand, to see if you do have potential to get in on that side of the trade that you want to get in onto on a smaller time frame. For example, this double bottom that we had down here at 17,350, we tested it once, we bounced, rejected, tested it again, but did not put in a new low. Okay, so once we had an hour candle start to take out supply and a previous 1 hour candle high, you can see that we had potential to push to the 20-day moving average and a linear regression. And if we got over that and started to confirm, there was room into the 50 EMA and 50 SMA. So on your smaller time frames, if you see that push up, you can start to go with the trend, the short-term trend, to the north side versus trying to look for the reversal, if that makes sense, or look for the continuation back down to the short side. I hope this video maybe opened a little bit of insight into how you can approach the markets. All in all, remain extremely patient and extremely calm. Okay, the money will come, just allow it to come to you. I'll see all of you guys on the inside. If you guys are interested in trading with me, that link is down in the description box below. If you guys are interested in adding some more evaluation accounts because you lost some evaluation accounts today, I've got my Apex link down in the description box below. Would love to see you guys trading in Evolution Traders. I'll see the rest of you guys back on YouTube.